Hi friends, welcome to Simply Options. I'm Rosario, practicing chartered accountant and F&O trader. I'm glad to present this channel to all of you, wherein I'll be discussing all about option trading from basic level to the advanced level of options trading. There are a lot of channels in this space who are doing the same content. So one would ask us, why should I watch this channel? For that, one line answer would be from us is, you watch it, you will feel the difference. Well, this is not the difference we were talking about. Without any further ado, let's jump into today's topic, taxation on futures and options. Basically, this is a quite complex topic. So in order to understand this better, let us bisect this topic into 4 smaller segments. Segment 1, outset. How this F&O income is going to be taxed. Whether it is going to be taxed as business income or it is going to be taxed as capital gain. Let us understand this with a small example. Say for example, Maruti share, say 100 shares, you are buying Maruti 100 shares at 7,000 rupees and selling the same at 8,000 rupees. So basically you have gained 1,000 points into 100 shares, 1 lakh rupees profits you have booked. So how that will be taxed? Generally it will be taxed under capital gains. If it is held for a short term, it is short term capital gains. If it is held for a long term, it is taxed under long term capital gains. Same scenario, you are going future long in Maruti with a lot size of 100 and buying that future long at 7,000, selling it at 8,000, which will also result in 1 lakh gain. So if you logically think that will also should be taxed under capital gains, right? But the answer is no, it is taxed under business income. Business income, all right, whether it is speculative or not speculative. What silly question, the whole world knows it, F&O is speculative in nature. We are basically taking the bet on market direction, right? Even my mother-in-law knows it, I'm gambling on a daily basis. But the fun fact is, the Income Tax Act doesn't know it. So it has declared F&O income as non-speculative. Jokes apart, why would an act declare such a speculative in nature income as non-speculative? If you see conceptually, as a trader, you can always establish yourself, you have taken this futures and options trade to hedge your risk. Basically, these instruments are devised in such a manner to mitigate your risk. So since you can establish you are using this instrument for such a purpose, you can always prove yourself it is going to be a non-speculative income. Now that we have established F&O is a business income in nature, for any business there will be certain expenses will be incurred in order to generate that business income. So typically as a trader, what all expenses you can claim, let us see that. We will start with the basic expense which will be mandatorily will be incurring, like brokerage, GST, stamp duty, turnover. If you have borrowed money and used this as a capital, then interest will be incurred, internet charges, electricity charges, rent, some softwares you will be using it, some webinars you will be attending it, and say certain assets like computer, table, furniture, all those depreciation, all these things are definitely allowed. In short, I can say any expenses incurred which is pertinent to generate this income, it's all going to be allowed. But that expense has to be legal in nature. If you are giving bribe to Infosys CEO to know the results 1 day prior, that expense is not going to be allowed. Segment 2, turnover calculations. Let us understand how the turnover is calculated for futures and options. First, let us look into futures. For futures, turnover calculation formula goes like this: absolute value of all profitable trades plus absolute value of all loss-making trades, all loss-making individual trades. We will take an example to understand this better. Okay, you have gone HDFC Bank future long, which means you have bought HDFC Bank at say 1,000 rupees and you have booked that at 1,500. You are basically sitting with 500 points of gain multiplied with a lot size of 550. The total gain is around 2,75,000. Now transaction 2. Reliance future short you have gone say at 1700 rupees, then you know what happened. The Reliance shot up from 1700 to 2700. The current market price is 2700. So you are basically sitting with 1000 points loss, and the lot size is 250. So totally you are sitting with 2.5 lakhs loss. So in transaction 1 you are sitting with 2.75 lakhs profit. Transaction 2 you are sitting with 2.5 lakhs loss. For the purpose of turnover calculation, it's not 2.75 plus and minus 2.5 at 25,000. That's not the case. It is absolute value. The loss of 2.5 lakhs also you have to convert into absolute value. So it's 2.75 lakhs plus 2.5 lakhs. 5.25 lakhs is the turnover for the purpose of futures and option turnover. Options turnover, basically the formula is almost the same with one small addition. The formula is absolute value of profits of each transaction, then absolute value of loss of each transaction plus the sold value of premium of each transaction. That's how the formula goes. Let's understand this with a quick example. HDFC call option, you have bought it for 100 rupees, you have sold it for 600. So the total gain is 500 points into the lot size of 550. 2.75 lakhs is your gain. Transaction 2, Reliance put option, you have bought it for 1010 rupees. Since the market has rallied, you have sold it for only 10 rupees. So the entire loss is 1000 points multiplied with the lot size of 250. You are getting 2.5 lakhs loss. So we know from futures we know we have to take it the absolute value. So the turnover is 2.75 lakhs plus 2.5 lakhs, 5.25. Till here it is same like futures. Now what is the additional thing which we have added? Sold value of premium. In first case, the call option we have sold it for 600 rupees. So 600 into 550, that will be added plus 3.3 lakhs will come into picture. Then the second case we have sold the put option premium for 10 rupees. So multiplied with the lot size of 250, 2,500 rupees will be added. So the total turnover is 5.25 lakhs plus 3,30,000 plus 2,500. So totally 8.6 lakhs odd will be your total turnover as per options. Segment 3, presumptive income and tax audit. Let's understand what is presumptive income first. It is governed by section 44AD of Income Tax Act. What is presumptive income? See, when you can presume your income based on your profit margin in your prevailing business, when you can presume your income, just presume this is going to be my net profit and just pay tax on it. In that case, you don't have to maintain books of accounts, you don't have to go for audit. You just presume your income, pay tax on it, and you lead a happy life. This is what the benefit which is given by the Income Tax Act to the small traders. Okay, this is what the presumed income goes by. Who are the small traders we are talking about? Any businessman whose turnover which is less than 2 crore are considered as small and medium businessman. So for those people, this particular benefit is being given by the government. Now let us see who all can avail this section. There are few conditions to it. Okay, condition number 1, your turnover should not cross 2 crores. Condition number 2, your net profit, what you are showing now, it should not be less than 6% or 8%. Let us see why 6% and 8%, two different categories later. Condition number 3, you should not be covered in any other section covered in other presumptive income sections. Say for example, you are a doctor, lawyer, chartered accountant, architect. So those kind of professionals who are also doing F&O trading, they will not be covered under this section. The simple reason is they are covered under 44ADA, it's a different section. Since their presumptive income is covered there, you can't, as an F&O trader, you can't avail this section. So these are the conditions which will make you eligible or which will make you not eligible to avail this particular section. Let us understand this with an example. Example 1, say businessman X, his turnover is around 2.1 crores, okay, and his profit, which is net profit which he made out of the turnover, is 21 lakhs. So whether he is eligible to avail this particular section? So the answer is no. Why no? Even though his profit margin is 10%, which is greater than 6 or 8% on the respective categories, but still he has breached the first condition of less than 2 crores turnover. So that's why he is not eligible for this particular section. Now example 2, Mr. Y, whose turnover is 1.9 crore, which is less than 2 crores. Okay, his profit for that particular financial year is only 6 lakhs. Now whether he can avail these sections, still the answer is no. Even though his turnover is less than 2 crores, but his profit margin is less than 6 or 8% on the respective categories. His actually the profit margin is only 3%. So since he is not meeting out in the profit margin category, he also cannot avail this section. Okay, now in the throughout this particular section I was saying 6% or 8%. Why there's two different categories? The government is saying, say if you are doing all the transaction in a digital mode, so our F&O trading is kind of a digital transaction. All your paying, you are doing it through banking channels, your payout is through banking channels, all your brokerage, stamp duty, all these charges also is through digital mode. So if such a kind of digital transparent mode you have, then the profit margin is reduced to 6%. If you have a lot of cash transaction in some other, all the other business, if you have a lot of cash transaction, what do you mean by lot of? Out of your total payment and receipts, more than 5% if you have as cash transaction, it is deemed to be non-digital. So on those cases, the minimum profit margin is 8%. On digital cases, the minimum profit margin is 6%. Couple of final keynotes before we wind up this particular segment. The first keynote is, if you are a profession, you are an ineligible person to avail this 44AD. Let us understand that also with an example. Say Varun Doctor, it's a bad movie, anyway we'll take that as an example. Varun Doctor, who is into practice, he is earning around 45 lakhs gross turnover, out of which he is reporting 25 lakhs net profit. This is his business number 1. Business number 2, he is into F&O trading, his total turnover is 90 lakhs and he is reporting 9 lakhs as profit. Okay. So basically, if you bluntly see, his first turnover is 45 lakhs, second turnover is 90 lakhs, total turnover is 1 crore 35 lakhs, which is less than 2 crore. He should be obviously allowed to avail this 44AD, right? He need not maintain books of accounts, he need not do any audit, all those things, blah 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 will come into picture. But no, the answer is no, because he will be an ineligible person to avail this 44AD. The reason is, since he is a doctor, he will be covered under 44ADA, due to which his ability to use this 44AD for F&O trading is banned. That's the key point I want to drive in, because there are a lot of doctors who are also into F&O trading. So this particular small example is for them. Now keynote number 2, this is going to be little tricky, pay keen attention. There is a subclause 4 in 44AD. Okay, what the subclause says is, it basically says this: if you are availing this 44AD section, you are bound to be sticking with this particular 44AD for the next 5 years. Meaning you should not jump between one mode of presumptive income reporting and then to a normal income reporting. You can't jump in between. So what it has said is, if you are doing presumptive income and next year if you are opting out of it, then you are banned for the next 5 years not to come back again for the presumptive income. Not only that, if you are opting presumptive income and then jumping out in the next year, then you are mandatorily, your books of accounts will go into tax audit. That's the penalty they are giving you for you to go out of this presumptive income. Okay, so only with this one small exemption they are given, you are mandatorily you have to do tax audit only if your taxable income exceeds 2.5 lakhs. So that's a small exemption they are given. Obviously it will definitely cross 2.5 lakhs at least. So for those cases where the profit crosses 2.5 lakhs in the subsequent year where they have opted out the presumptive income, they will all be under tax audit. That's it, friends. Hope you find this video very useful. You can reach us in the comment box. My Twitter ID and my contact number, WhatsApp number has been given in the description. You can definitely reach us any point in time. If you would like to file income tax return with us also, you can ping me. We charge a very fair price. That's it. Let us connect in the next video. which will be the continuation of the same topic, F&O taxation part 2. It's like Bahubali part 2. The reason for doing it is as a separate video because it's a topic of its own, which require exhaustive detailing and keen attention also. As you know, human mind cannot be continuously attentive more than 15 minutes. So that's better we cover this as a part 2 video, wherein we'll be discussing two major and important topics. One is tax audit. So in tax audit we will cover what is the turnover, whether it is 1 crore or 5 crore or 10 crore, because there is a lot of ambiguity again around it. So that we will cover. And what if you make losses, whether that will make you mandatory for a tax audit, whether opting in and opting out for presumptive income, what are the implications with respect to tax audit. So all these things we'll be covering in the next video. And one of the most discussed topic in the social media is, what if I make losses? How can I use my losses? Whether I can use it against my equity gains or any other business gains. If so, how long I can use it? What all the things I should comply to use my losses? So this is also an important topic, though it's not exhaustive, but it is important. We will cover these two important ones as a part 2 of this video. Let's connect. Next video is going to be very interesting. Let's catch up in the next video. Thank you.